This presentation is about economic policy. Does the government really direct the economy? In particular, we will look at the economic policy after the major international crisis of 2008. In general terms, and in the countries of Canada, the United States, and the United Kingdom. The crisis in 2008 was the worst global financial crisis in several decades. There was a steep and synchronized global downturn in most industrialized countries. The G7 countries got sharp GDP contractions. In other words, their economies got smaller. The financial markets, which are critical to the economic life of any country, were both stressed and unstable. There was a global credit shock, and credit became harder to obtain, and there were widespread recessions. In Canada, the situation deteriorated less than in other G7 countries. There were certain structural strengths to our economy which protected us. Lending practices and housing markets were more regulated, and therefore the excesses were not as marked. Structurally, the governments in the country were solid from a financial standpoint, but there were challenges. The financing was both more expensive and more rare. There was less demand for our exports because of recessions in our markets, and there were reduced profits and incomes because of the drop in commodity prices. So what did Canada do about this crisis? Well, it spent an awful lot of money. To stimulate consumer spending, it gave $8.3 billion more in assistance to the unemployed, and it also collected $20 billion less in personal income tax. A traditional measure of the end of recession is increases in housing construction, and to stimulate that, the government spent $7.3 billion. To build infrastructure, that is to say highways and school and bridges and roads, it spent $12 billion. To support businesses and communities, it spent $7.5 billion. And to assist in financing and the financial system, it spent $200 billion. The United States also faced a crisis and also had a plan, a large economic stimulus package. It included tax cuts of £270 billion US, increased Medicaid to the tune of $87 billion, clean, efficient energy subsidies to the tune of $54 billion, the building of roads, bridges, and buildings to the tune of $90 billion, modernization of education to the tune of $141 billion, unemployment insurance and training increases to the tune of $102 billion, for a total of $819 billion. The UK also put in place a plan to manage the crisis. First, it spent £20 billion, or about 1% of its gross domestic product, or the entire size of its economy, to stimulate and protect economic activity. The spending had several goals: to restore the flow of credit which had dried up, to support an economic recovery, and to build or rebuild a strong economy. It was paid for by borrowing more and by increasing the top local income tax. The public debt was to fall by 2017-2018, but the deficit ballooned, first to £78 billion, then £118 billion, and at that point, the debt represented about 57%, or more than half, of the GDP in 2013-2014. The UK took a large number of actions as well. The VAT, or the value added tax, was cut from 17.5% to 15%. The top rate of the income tax, however, went up to 45%. National insurance contributions rose by 0.5%. Pensions increased by about 5.2%, or above the rate of inflation, and there was in addition a one-time payment of £60, a £10 Christmas bonus, and a winter fuel payment to pensioners of up to £400. There was £1.3 billion set aside for pre-redundancy training, that is to say, to help people who were about to lose their jobs. The child benefit increased and was presented to people 3 months early. There were additional tax credits and a one-time payment for disabled children. Polluting cars had the excise duty go up more slowly, but the gas tax went up to compensate for the VAT coming down. There were guarantees for mortgages, more help with mortgage payments if a job was lost, and £1 billion more for social housing. There was an increased tax for long-haul flights, £100 million on insulation for low-income homes, and enormous spending on motorways, social housing, and schools to the tune of £3 billion. Nonetheless, the question remains, does the government control the economy, or does the economy direct itself?